Hi and welcome, Krystle McGilvery from Mind Over Money. Now this video is for you if you are a business owner or an aspiring business owner and you're not the biggest fan of finance. In this video, we're going to cover 5 key concepts that you can dive into to help improve the finances in your business, help you spot opportunities and improve your cash flow, which are all very crucial for you to continue maintaining a sustainable business. It will be jargon free, or where I do use terms that aren't most commonly used, I will explain them. So let's go, and I hope you enjoy. Before we do, if you've not met me before, my name is Krystle McGilvery. I'm the founder of Mind Over Money. I'm a chartered accountant with 15 years experience, and I'm a behavioral change and finance consultant. And I do this work day in, day out, working with founders just like you to help you optimize the finances in your business. Let's go. Now, the first area which I think is very crucial is cash flow management. If you don't know, many businesses, if not most businesses, fail because they haven't managed the cash in their business well. Now, cash flow management is all about you managing the cash flowing into and out of your business. The tip here is to build a cash flow forecast, which is you planning ahead of time how much money will be coming into the business and leaving the business. It is a creative activity. It doesn't require a lot of number crunching, more so creative skills. You are preparing for downtimes in your business. So those periods, those seasons when you're not generating as much sales as you would normally. So you can be creative and identify alternative ways to help maintain and sustain the business during that time. Now let's give you a quick example. Let's say you have a business that is beachside and you are booming during the summer months, but actually business is very low during the winter months. Now, if you were to build a cash flow forecast, you'll be able to see clearly the impact of that downturn on your cash during those winter months. Now, being able to see that ahead of time gives you the opportunity to make smarter decisions ready for that downtime. For example, reducing your costs or identifying ways that you can negotiate with your suppliers so you're not paying as much, or being creative about your sales and offering different or unique services and solutions that you can sell to your clients and still generate an income during that downtime. Doing this allows you to not have so much of a financial strain when sales are, as they are expected to be, lower in those winter months. Now, I do have a free resource that I've made available to you before, and I think quite a lot of you downloaded that. It's a cash flow forecast, and it's all about planning for cash. There is an accompanying video, and there's a link below that you can check out and get your copy and hopefully start planning for cash in your business. The next point that is crucial when it comes to managing the finances in your business is budgeting for marketing expenses and tracking return on investment, ROI. So you might want to allocate a certain amount of money to spend on marketing a specific product or service, and you want to track and manage how much money you've generated off the back of that expense. It's a really useful tool because then you're equipped with information about how much money you can make when you promote a certain product or service. And this can help you going forward when you're planning spend in your business. Now let's dive into an example. Let's say you have a coffee shop and you have made a new type of coffee that you'd like to advertise. You allocate, say, £5,000 towards marketing, and you then track how much money you make associated with that marketing. What you can then go on to do is look at how much money you made in sales related to different types of campaign. As I said, this is really useful because then it gives you the information to know which campaigns generate the most revenue. Really powerful stuff when it comes to you planning ahead of time for what best campaigns to use for future products and services. Now, this might be my favorite, and it's all about developing a positive mindset. Now, if you haven't started your business yet, you will soon find out that the business journey is very up and down. You have extreme periods of highs and bank balances flowing through the sky and winning clients and high fives left, right, and center. But equally, you have periods of downtime when you didn't win the client, where your cash balance is very low, and it's quite nerve-wracking. Having a positive mindset is crucial to get through those times. It plays a crucial role in allowing you to be creative when times are hard. Now let's give you a quick example. If we think back to the beachside business, obviously during the winter months when sales are low, it can be quite uncomfortable, especially if you haven't done your cash flow forecast, which I know you will be doing now. But if you haven't, or even if you have, it can be really nerve-wracking to see that you're not generating as much business as you was before. You're likely at this point to have experienced an economic downturn where business slows down and people aren't spending as much. Now, the hit on a business is they don't generate as much sales and income as they would normally. Now, this can be really nerve-wracking, especially if it's usually a period where you have high sales. Now, this is where having a positive mindset is really crucial. Having the right mindset is going to allow you to be open to identifying opportunities to be creative and identify maybe new customers you could target, or offering new products and services to the market that maybe have been in the back burner for a while. Having a positive mindset is imperative if you are trying to build a business. It allows you to ensure you stay profitable because your mind is open to those opportunities. Now, the next point is about leveraging technology. We're living in an environment where technology is growing at such a fast pace. So there's great opportunities for you to use technology to optimize your business, both inside and outside, whether it's the actual products and services that you offer or internally operating your business. Using technology can help improve efficiencies and reduce mistakes. But let's go ahead with an example. Say, for example, you're running a catering business or a hair and beauty salon and you have had trouble tracking your expenses. It's all a bit messy because it's done by paper, maybe Excel spreadsheet. Using technology to connect up different applications to, for example, your accounting software, is going to give you the information you need to make smart decisions and save you time. Also, as I said earlier, it reduces the chances of mistakes. This ultimately helps you make better financial decisions because let's give you an example. Say a supplier calls you up and offers you a deal on a certain product that you need in the business. Because you now have the timely information about the position of your business, the cash balance, how much profit you've made to date, you can then decide as a fully informed director of your business what to do and whether to take advantage of this opportunity, ultimately improving your profits in your business. Use technology to optimize your business, save time, and improve your bottom line. Next, we're talking about risk management and contingency planning. Now, this is crucial. If you run a business, it's likely you are exposed to a range of risks, internally and externally to your business. It is crucial that you have built a contingency plan so you know what to do if any of those risks arose. Let's dive into an example to explain how you can use this. Say, for example, you're a tech company or any kind of company and you rely on two main clients for the majority of your income. Say, for example, one of those clients or both of them decided to stop working with you or to pause working with you for a little while. Immediately, you don't have that big chunk of income coming into your business. This is likely to have a big impact on your bottom line, which is your profit. This may then cause problems when it comes to paying suppliers or paying your staff. What you want to have done is built out a risk register, which details all the potential risks your business could face. Then a contingency plan as to how to avoid them. So, for example, relying on two clients to be your main source of income is very risky. So what you'd want to do is identify ways you can diversify your income from a range of clients by offering different products or services, or partnering with other organizations where you can offer your services as an add-on. There are many creative ways you can help caveat risks and mitigate them having such a significant impact on your business. Now, there's a tool that may be really helpful for you to get started thinking this way called a SWOT analysis, and it takes you through the strengths, weaknesses, opportunities and threats in your business. I do, of course, have a handy little resource that you can use to go through this process. Check the link below and let me know what you think and if you found it helpful. Now, before I recap on two main key features that I want you to pay attention to, thank you and well done for getting to the end of the video. I hope you found it useful. Of course, please do like, share, comment, all of the good stuff. And just to remind you, there are two resources below that can really help you with two main areas that are really important when it comes to managing your business finances, and that's the cash flow forecast and the SWOT analysis. Until next time, take care.